Iran isn't the first.
I take the threat very seriously.
When basically I can see that they will no longer have any capacity whatsoever for a very long period of time of developing
weapons of mass destruction.
Nor will it be the last.
And it was my opinion that they were going to attack first. They were going to attack. If we didn't do it, they were going to attack first. I felt strongly about that. And
There has always been conflict. There will always be conflict. And someone will always be there to profit from it.
Mr. President, you just suggested that Iran somehow got its hands on a Tomahawk and bombed its own elementary school on the first day of the war.
In antiquity, financing wars was straightforward. Rulers funded campaigns through tax and tributes. The Persians levied provincial taxes. The Romans relied on treasures brought home from war. Through the medieval period, lords supplied knights in exchange for land grants. And if wars extended, they would seek cash loans from Italian banks. Edward III famously defaulted on one of these loans, triggering a banking crisis across Europe in the 1300s. The 1500s saw the rise of sovereign debt markets. The Dutch Republic created the first low-interest government bonds, revolutionizing the way financing was done. England followed in the late 1600s when they founded the Bank of England, created for the sole purpose of financing wars against France. Until the Second World War, most of the financing came from bonds, loans, and taxes. That was until the rise of the military-industrial complex. This resulted in an overwhelming increase in government contracts with companies like Lockheed Martin and Raytheon. The unfortunate reality is privatization encouraged government lobbies for support of proxy wars and conflict over trivial matters.
Weapons of mass destruction.
In the modern age, wars have become less of a necessity and now exist as a way to make profit. From resource control, private military contracts, reconstruction contracts, and weapon sales. These wars will happen anyway, so how can we profit from it? For the sake of ethics, I'll put each method into a category: benefiting and funding. Benefiting will cover methods where returns are correlated from the war happening, but your funds don't go directly to the war or have a direct impact on anything that happens in the war. Funding is the opposite. Your capital will go directly to the front lines. I'm not here to promote any of these methods, just to educate. Anyway, let's get into it. Our first method in the benefiting category, and probably the most morally acceptable, is to buy derivatives, specifically commodity futures. These are generally in the form of a contract to buy gold, silver, or essentially any physical item that people find value in. If you want to go a step further, research the region that the conflict is happening in and what they specialize in producing. For Iran, oil is what we would focus on. Futures have increased 41% since the war started and peaked at 77%. Since 20% of all global oil passes through the Strait of Hormuz, if Iran were to place heavy restrictions on it, we could see prices skyrocket further. Although they have been threatening to do this already, so it's hard to say how much of that is already priced in. Quite a lot has happened since I recorded that. There has been a lot of talks about them mining the strait, which would essentially put an end to all oil exports and travel through the strait entirely. You can even sort of see that most of the traffic is already halted and no one's going through the strait. So it's hard to say what's going to happen next, but it's not going to be good. This is a table showing the top producers of each major commodity. For some more examples, Australia is the largest exporter of coal, iron ore, and lithium, so if we were invaded, this is where I would be hedging my bets. If you don't know how to trade futures or just want to keep it simple, the same result can be achieved by trading ETFs linked to the commodities, or companies that have strong correlations with these commodities, like buying gold miners instead of gold, or shorting airline companies when oil spikes. Our first method in the funding category is buying war bonds. When you hear war bonds, you might think of the old-timey shows and advertisements with celebrity endorsements telling people to buy the bonds.
Let's all of us get behind our boys. Let's build, 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 and make this a victorious 1943.
Even though these kind of advertisements haven't aired in decades, the war bonds are still around today. In early 2020, after the Russian invasion, Ukraine issued bonds. Their 1 year had a yield of 56% and currently sits around 25%. At first, these were only accessible to institutional investors like fund managers, but they later became publicly accessible through the DIA app, which is like a government services app for Ukrainians. It's pretty complicated to get your hands on one of these as a foreign retail investor, but the easiest way is to go through ICU trades. This also isn't a great example because they've already partially defaulted on these, and it's very likely that you'll either get your principal and interest, but it's worth less because they intentionally devalue their currency to afford it, or they just don't pay you at all. These kind of bonds aren't super prevalent these days anyway, and definitely not something I'd recommend unless you really support the cause. I think Israel has some of these too, but I don't know if they need them. They get a lot of money from US Congress. Bottom line, unless you're a resident of the country being attacked, you're not really going to come across these. Second in the benefiting category is to buy military contractor stocks like Palantir, Lockheed, etc. Now I know what you're thinking. How is this benefiting and not funding? It's technically both, but that comes down to a misunderstanding of how stocks actually work. Yes, when you buy a stock, you're owning a portion of the company. And yes, your returns are mostly correlated with how the company performs. However, the money that you paid for the stock doesn't actually go to the company. See, stocks are sold on the secondary market, meaning the money from the IPO has already been received by the company, and any additional purchases of the stock are just exchanged between investors. This means that any stock being purchased will have a minimal effect on how the company actually operates, and will only affect areas such as employee compensation and later funding rounds. The only situation where your money would ever go to benefit the company itself is by buying the IPO or buying secondary offerings like new shares being issued. In times of war, these stocks are likely to rise based on the thesis that an increase in hostile global activity means more government contracts for these companies, thus increasing revenue, and the revenue being shared with the investor via increased stock price, dividends, etc. And now to our last funding method. If you really have no soul and you really want to get involved in the effort, start selling arms. First, you would have to decide where you're actually selling. Register on sam.gov to get your UEI and cage code, obtain necessary licenses, FFL from the ATF for manufacturing firearms, and ITAR registration with the DDTC for munitions, and get your product certified to the relevant military specifications. Build a quality management system and compliance infrastructure, partially around export controls. The most practical entry point is becoming a subcontractor to an established prime contractor rather than bidding directly on government contracts. This also helps build the past performance record that larger bids require. Register for small business set-aside programs if you're eligible, and attend industry events to build relationships with prime contractor supply chains. Once you have revenue, certifications, and a track record, you can pursue direct prime government contracts and eventually foreign military sales through ITAR compliant export channels. And there you have it, you're officially an arms dealer.
Hey, seriously, is this safe? Driving to Baghdad?
Yes, very safe. 50-50.
It's important to understand that all of these strategies are trying to profit from tail risk or black swan events. Creating a whole investment strategy based around this is not only impractical, but if your timing isn't right, you'll either be too early and get shredded by swaps, fees, or other costs if you're going for the last route. Or if you're too late, you'll be someone else's exit liquidity. In an ideal world, this wouldn't even exist, but using these strategically can be an effective way to hedge downside volatility in your portfolio in times of heightened global instability. Anyway, I hope these were insightful. Happy trading.